Hey guys, welcome to High Stake Society. So today we're gonna be learning about what is futures, mainly what are all the risks that comes when you trade futures, and basically how to trade futures with the signals we give. Okay, so before we start into the whole topic of futures trading, I'll tell you guys what the risks are. So when you trade spot, when you have money in the spot wallet and you trade spot, the previous video, if you don't know what spot trading is, go to the previous video that we posted. Imagine you have $1,000 in spot wallet and you buy a particular coin like Bitcoin. You buy a certain amount of Bitcoin. This Bitcoin will be there forever in your wallet till you sell it. And that can be years depending on how long you want to hold it or if you want to hold forever. So same thing. But when you trade with futures, that's not the same case. You're adding leverage to it, so you're taking money from the exchange like Binance, something like that. You'll be taking money from them, like $1,000 will be multiplied by 10, that is 10x leverage. I'll show you all that once we get into the chart, but it will be leveraged, and that way you will not be owning the coin, but you will have the trade running and you will get profit from that. That is, with spot wallet, $1,000 trade will not be that big as $10,000 trade. So I guess you're getting what I mean. Yeah, you can make money shorting also with leverage trading. Imagine the market is going down and you have an idea that it's gonna go down and you have a particular level that it will reach down. Then you can short the trade and you can make profit doing that. If there are more stuff that you guys have to keep in mind, what we'll do is we'll get into the market and I'll show you everything one by one. Here we go. We are in our Binance. So if you want to trade, first thing we have to do is you have to click on derivatives and then click on USDM futures. That will take you guys to the trading panel. Yeah, so from here, in order to use our signal, you can use BTC USDT. Make sure it's perpetual, because perpetual means there's always a time period on how long you can hold a futures trade. If that time period is over, the value of the futures trade will be literally zero. So when you take perpetual, that means you can hold it for a longer time. You can actually hold it for a pretty long time, as in like it's more forever. So unless the stop loss or your stop loss or the liquidation price happens, the trade won't be lost. So let's say we're going to take an example of today's trade. I'll leave it somewhere on top over here. Let's say we're using Atom USDT. So what you have to do is you have to go here, search Atom USDT. Where use Atom USDT. Yes, here we go. That's a perpetual pair. And this trade has already happened. We called it by 7 in the morning, somewhere over here, and our first take profit was at 11, so it's still on the way. Somewhere over here is the next take profit. But imagine this is what you're gonna buy. So before I show you how to buy, I'll tell you a few things that you have to keep in mind. So when you trade futures, make sure the trade is right, otherwise you're gonna lose a lot of money. Not just a lot, you can lose all your money actually, especially if you're doing with cross and isolated. That's another topic we'll take care of. Okay, we have two kind of modes that we can use in trading futures. So one is cross and one is isolated. So cross is where you guys can have money in the wallet. When you place a trade, if there's still money left in the whole future wallet, your liquidation amount will be way more less than compared to isolated, because isolated has a fixed. Before I move further, I'll tell you what liquidation is. Basically, when you take loan, you're literally taking loan over here. You're taking $1,000, you're lending 9,000. Depends on how much leverage. I'll show you what the whole leverage thing is. Imagine you have $1,000 and you're gonna take leverage of 10x. I'll show you what leverage is in a bit, but basically you're taking 10x leverage. So that $1,000 plus 9,000 will become 10,000, because 1,000's 10x is 10,000. So you're taking 9,000 as little loan from an exchange like Binance. So from there, the Binance itself will add a liquidation price. So that means if the market goes sideways and it hits that liquidation price, all the money, including your money, will get wiped out. You'll If the trade goes sideways and it hits that spot, then the whole money will be gone. So I'll show you what that is. But if it's cross, then the liquidation amount will be higher, as in it will only get liquidated after all your money in the vault is gone. That's why people don't usually trade cross much. People usually stick to isolated because money management is the key in trading. Okay, so if you wanna increase your leverage, all you have to do is click here and you can increase your leverage. So the more smaller the leverage, the better, because the liquidation amount will be way lesser. The more bigger the leverage, as in 25x or maybe 75, your option till 75 or more, actually I think, I'm not that sure, but I usually stick to almost around somewhere between 20. I don't usually go above that, because the leverage amount, as much as the leverage amount increases, that much the liquidation amount will be closer to the price that you have bought the coin. So if that's the case, you might get liquidated, which is not a good thing. So yeah, try to keep it under 10x. Okay, so now I'll show you how to trade using our signals. So let's say you want to get into the market by 10.56, yeah, or 59. Okay, so that's the price you wanna enter. You write in how much ever like amount you want. Let's say you wanna put $10 and you put that. You adjust how much this is a percentage bar. You can adjust how much percentage of your money you want invested or traded with. So you can add take profit and stop loss. So stop loss is there in our signals always. So our stop is 9.5 and our take profit will be, first one will be 11.35. Try to exit the trade within the first and second, that'll be more better. So go here and then yes, just click buy long. Your trade will place whatever you see here. Okay, if you put $10, then with 20x or 75x leverage, the leverage amount will be here somewhere there. So in case this candle closes around, let's say over here, if it closes around there, then the trade will be liquidated and you will lose your money. So be careful how you trade all this. But as long as the leverage is smaller and smaller, the more smaller the leverage, the lesser risk you're gonna have. So try to get into a trade with very less leverage. Try to make it under 20. That's the most safest you can go. After that, just click on buy, or if you want to short it, click on short, and your trade will be right over here, and there'll be an option to close all positions right over here. You can close the position and you can enjoy your profits. The profits will be left in your wallet, and yeah, well, that's how easy futures is. But it's the same, it is a bit more riskier than spot, but with the right procedures, you guys won't lose that much of money. You guys can actually gain a lot from futures. Most of my capital is earned from futures trading. I don't trade spot that much. I usually trade futures. So futures is a good place to trade with, but the risk is also high. But this is a game of risking and making cash. So yeah, well, that's it for today's video. Wait for next one next week, same time. Yeah, catch you guys in the next video.